Warren William here for Smartest Data. Quick definitions: earnings or net earnings. Arguably the most critical data point announced by a company in an earnings report. Why? How is net earnings calculated? What are net earnings used for? Let's go to the video to define, explain with 3 bullet points to take away. The earnings figure is what the company has produced after all expenses have been deducted from sales. It will be used to calculate the EPS and in turn the PE ratio, then either held as retained earnings or paid out as a dividend. At the end of an accounting period, a company reports its net earnings or net income, the last line in the profit or loss. To arrive at the net earnings figure from sales, all the different expense categories are deducted: cost of goods sold, general and administrative expenses, operating expenses, depreciation and amortization, interest expense and taxes. Net earnings is then used to either pay dividends or transfer to shareholders' funds held as retained earnings. The net earnings number is the basis for calculating earnings per share, which is calculated by dividing the earnings number by the number of outstanding shares. Earnings is a critical number on the profit and loss. Three takeaway bullet points regarding earnings. The earnings or net earnings is calculated by taking off all the expenses. It's the bottom line of the P&L. So operating expenses paid, financing expenses, taxes. Earnings then is either held as retained earnings as part of shareholders' fund or paid out as a dividend as a reward to shareholders. The net earnings figure is the basis for the calculation of the PE ratio. So we take net earnings and divide by the number of shares outstanding to have earnings per share. The PE ratio then can be calculated and compared against the stock's history, against the sector PE averages, and then against the main PE averages for the main index, such as the S&P 500.